The following is a presentation of TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom O'Brien, Tommy O'Brien, and Darrell Martin.
Welcome, folks. We have the Dow Industrials right now up 142. We get the Nasdaq up 40. S&Ps are up 17. You got gold up $1.80. Silver's up 14 cents. Oil's the number out here, up $1.94. You get the notes down 10 ticks. The bonds are off 22. And good old King Dollar is down 124 ticks. And, folks, if you haven't test drove the Nadex platform, the exchange, great time to do it. Okay, come over to our website at TFNN. You can hit the banner, bring up the exchange, and put $25,000 of paper money into your account. You can follow us and see how these contracts trade each and every day. Darrell Martin, what's going on?
How you doing?
How you doing? What's happening, Tom?
What's happening, man?
Man, you know, you talk about volatility, folks.
I was just, as you were talking, I was like, I'm just going to throw the NASDAQ chart up there because I was looking at that earlier. And even that's only going back till 2 in the morning, right? If you should bring it back a little bit more from right around the close yesterday. That's quite an acceleration.
It's
you know, and what's crazy is, and we'll pull it up. Darrell, one of the articles for that binaryoptions.nadex site is so I was just going over Fibonacci retracements, and I wrote it last night at like 4:30 off of yesterday's decline.
4:30 in the morning?
No, 4:30 at night, right at the close yesterday.
Cool.
You know, and so it's sitting like it had just kind of come off the bottom, right? And I was just looking at, and 4506 is the 0.618 retracement.
Really?
Right on the dot. So
wow.
So I was amused when it spiked down this morning because I was just talking about one of the binaries. Maybe that's an area you could look for if you're looking for maybe a huge retracement, right? If you were bullish the market, and you thought Friday could get that, maybe that's a level that would help you choose a level when we're looking at the binaries. And I was like, oh man, it hit it. Well, I guess you could have, you could always get out at 50 because it was a low risk, trade, obviously, where you're way down here. But it's nice to see that it's still trying to get over that level, maybe, or playing with it.
Amazing.
Yeah.
And folks, what was amazing last night? So, picture, I'm going home it was early. It was like 7 o'clock, 7:30, and Asia was getting ready to open, right? And what happened? So, picture, yesterday our market came down pretty good, right? Well, it came down good in the context
of. I would say
so,
definitely.
And
the press was not good about it. Everything.
And so I'm looking at the oil contract. I'm saying to myself, man, oil is moving higher. This is 7:30 at night. And I look at the Asian futures, and the futures are up. I'm saying to myself, there's a good disconnect here, man. Oil is moving. Yes. And, of course, that's what happened all night long, folks, okay? Is that it moved the market.
I'm sure we'll take a look at oil at some point throughout the hour, right? For sure.
It's just,
you can't help it.
And
we're right back going at $40, right?
No doubt, man. No doubt. So what's been happening, Darrell?
I just enjoy the volatility. It's been insane this week. We've had like 300, pip moves on pound yen, and we got just, oil obviously moving 2 deviations right now. So up 39.40.
Yeah,
it's a huge move.
It is.
And so, which is a 96.7% of expected move on a day.
Yeah.
So, and we don't get that often. So, pound yen, we get it quite a bit lately. And it's one of the things I've been noticing is we'll get consolidation, then it'll break out into a trend on the following day quite a bit. It's a simple pattern I've noticed. But no, it's been fantastic for trading.
Yeah.
It's been a great week.
And the thing that's intriguing, I didn't see what the oil premium was. But more than likely, I've traded oil twice this week. I didn't trade it last night. And of course, right now I think it's too late to trade it. But not too late, but for a day trade. You know what I'm saying? And what I've noticed is that, man, there hasn't been a big premium in oil for the type of volatility that you actually can get in oil.
Right.
Yeah. Well, I guess when you get the type of move, right, 97.5%, that just doesn't get priced in because it happens 1 out of, what?
Right.
40 times by that. If it's a 2% chance, but no, you're right.
But it is, and I guess that's over a longer period because remember, I got it last week and it moved that much last week.
Yeah, it's like, a lot of volatility.
You know what I mean? It's like, okay, and I only paid 20 cents last week and got like $1.50.
We were talking to Kevin Hinks, right? And we were talking about the VIX and how it's just so low, really.
Yes.
And that allows for some good option plays, because when it's so high, the premium you have to pay, the moves you have to get in order to make that a profitable trade are just substantial.
Right. And, you know, folks, if you do trade the option market and you haven't tried the Nadex platform yet, you got to try it, because, you know, I'm not quite sure whether it's the type of volatility that we're getting and the movement we're getting, or that the spreads are getting tighter. But, you know, it seems to me, you know, trading these spreads have been kinder. You know,
you love the defined risk, and that's
I know,
because
I do.
You're trained for big moves,
right?
So you know you keep your risk small and your reward great,
right?
And you don't need to even bat 500, right? I mean, you don't. It's not even close. It's not even close.
I haven't found any place else that you can put a couple $100 up and make $700 or $800 on it. Do you know what I mean?
No,
and you're not going to do that a lot, folks, but you do. You don't.
And in this market where you're getting huge moves,
right?
You're kind of making a volatility play there, you know, because you're paying premium for huge moves. We've been getting huge moves, you know.
Right.
If you get them in either direction, that's half the battle. Because over time, as long as you're anticipating huge market moves, that's half the battle. It is
half the battle. You know, there's no doubt about it.
Yeah, the premium is flat as can be right now. I'm looking at the scanner, and I mean, it's like 5 pips.
Isn't that cool, man?
Yeah.
Now, and that's in crude oil. Well, no, see, I can see it now. Here, let's look, because I'd be paranoid to buy crude oil right now. But guess what? It wants higher price.
We'll pull it up.
Yeah. you stay right there, folks. Darrell, Tommy, myself, we're coming right back. You get the Dow up $1.45, Nasdaq's up 39, S&Ps are up 18. We got gold up $2, oil's up 210, and oil wants higher price, man. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, oil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. O'Brien and Darrell Martin. Tom O'Brien, we do appreciate you growling and prowling with us out here. And you talk about a market that is just about as deviant.
Before you jump across, even just because we were talking about it over the break, I mean, oil's up 40 cents in the last 15, 16 minutes. So it's still, you know, and the market had done substantial things before that, right? So it is. It's just
huge.
Cool. Yeah, it's just, you know.
No, and that's you know, it's the correlation is just so direct. It's pretty amazing.
Where is, Darrell, the exact like 2 deviation line on the crude contract?
It's sitting right at 39.42.
Okay, so it's right above it.
Look at that. So you know when they hit like you hit, there it is right there. So you hit the second deviation. You know, have you ever looked at you know, you hit a double deviation. It's like, okay, it breaks it. It wants to go to a third one,
it's all a bell curve,
Fibonacci number.
The bell curve has 4 or 5 standard deviations too, right? Right, Darrell? I mean, it's all just like
it just gets really
magnified.
It's whatever it passes that. Like usually, it takes a lot of volume. Like the volume has to be inclining to keep going, and we did have volume exceeding it to break through it.
Yeah, you did, huh?
So we got to see how the next 10. 20 minutes closes out here to see if it'll bounce off of it or not.
And particularly going into a Friday.
But it did bust through it with some strength. So it actually did bust through that second deviation with
up
strength.
So much already. I mean, it's just tough to really put those more than 2 deviations. Just from a common sense standpoint, you just sense it where you're like, this is an enormous move, you know?
You know what I'm digging, folks? You
can also fade it. So you can do it, or you can do a straddle on it if you don't think it's going to sit here all day.
Oh, okay. So, let's talk about that a little, just so we can understand how that would work. Because that, you know,
I'd like to hear about that. Yeah, definitely.
Right.
There's a couple ways to do a straddle on it. And a lot of times people don't see the straddles because they're not your perfect straddle. But you can go in and let's see here. We're at 39.54 right now.
Yes.
So you go in and look at a position. Let's see here. Let me uncheck that one. It looks something like this. And it'd have to break out. It's overlapping a little bit. Nice. Okay, so it'd have to break out of the area. But check out what the risk is.
And what 2 contracts are those exactly? I see it visually. That's awesome.
I'm on the noon contracts right here. I'm looking at 38.50 to 40, and I'm looking at the 39.25 to 40.75.
Perfect.
And so we do have to like basically break past like 40 plus whatever our risk is. Okay.
Okay.
Well, here's the beautiful thing. Our risk is the district where we buy and sell. Right.
Yeah.
Well, if we bought at 39.60 and sold at 39.45, we have a 15-tick risk. So you're basically taking on 15 cents of risk that it'll actually move from here.
Okay.
And then you have about $100 in profit potential on both sides.
And you have more than 15 cents of risk though if they move against you. Is that what I'm looking at the visual? And I see the loss columns with the blue and the red.
Right. So here, if you look at this column right here, this is the profit. So if it moves against you, the profit will more than cover the loss. If it moves down.
Sure.
Okay?
Oh, on one side of it. Yeah, I got it.
If it moves for you,
the
profit on the one you bought will more than cover the loss on the one you sold.
Sure. Okay.
So
I got you. I do.
And he'll be making money the entire way. So really, what has to happen is the distance between these 2 break-even points, which is 15 ticks. It has to move past that line by 15 ticks before you start making back your money for the 15 ticks.
Perfect.
As soon as it moves 15 ticks, you're profitable.
That's pretty good for something that's up $2.26 right now.
That's a good volatility.
Exactly.
Right?
Exactly.
Yeah, I mean, it's literally a 15-tick risk, and then if it stays flat, you only lose 15. So it's in that sense, it's like a really cheap straddle.
Yeah.
It's cheaper than even buying a straddle normally.
And that's not bad. That's the noon one, which is still over an hour and a half left.
Yeah.
In an active, I mean, we just said it moved 40 cents in the last 15 minutes, just observationally, not even looking at a trade.
And let's go. We're going to take a call because I think Thompson.
Oh boy, we were talking. He must have heard us talking about him during the break.
He heard us, and we're hoping he held this thing overnight. Hey Tom, what's going on?
Is he there? Let's see.
He's there.
They're trying to get him on the line.
We'll get him back.
He's a bit, maybe he's selling all that.
I know.
UWTI for some profit. We'll see what he's gonna do.
So Tom yesterday he trades this UWTI quite a bit.
He does, and he got out of it. There he is.
Hey, what's going on, man?
Darrell, how you guys doing?
Good morning, Tom.
I think you're doing better than we are.
Oh boy, I did a bad thing yesterday.
Okay.
I doubled down and then tripled down on that thing. So it was actually good, but I didn't. I didn't know what I was up for yesterday. But boy, I'm looking to say, hey, should I just take my winnings and get out of here, or what do we do now?
Wow, nice.
Yeah, definitely. because what you don't want to do, I wouldn't bring this over the weekend, even though it wants to go higher.
No.
There's no reason to that.
Yeah.
You know, the thing's up 15% right now.
I was saying we were wondering if you had it overnight, and you probably did. And I was saying, I wonder if you at least maybe just sold it on the open, man.
Yeah.
That was what we were saying, because it's just up so much, and you know, you don't want to hold it over the weekend. So why? Or just give it a real tight stop or something like that.
And for folks that are just joining us, folks, Tom has a UWTI, and the UWTI is the 300% velocity shares of long crude.
It's nice when it does.
And as he says,
97.5%.
you know, like he tripled down yesterday, but you know, you really didn't have to. I mean, the thing didn't move that much yesterday, man, right? I mean, I guess it.
Well, I jumped in when you said you liked it. I think I got the first buy at. I think it was it 1913 or whatever? Yeah, 1913.
Okay.
And I bought some more at 1902, and then I bought the final lot at 1887.
Oh,
yeah, I was waiting for like an 1880 or something like that.
Okay, that's cool. Yeah, man, sell them all right now and have a freaking blast, man. Go take your wife to the Four Seasons.
And it ends up at 23, right? So.
Yeah.
Yeah. Yeah, it was up to 23.11. It looks like it's pulling back a little bit.
Yeah,
so I think
I wouldn't let it go too far against you, if anything. Why?
Why?
Yeah.
I mean, yeah.
And just like Darrell said, you know, it's pretty close to that 2 deviation line.
Yeah.
So if it's going to shoot one way or the other, right, it's probably going to pull back to 1 deviation rather than going to 3, just by.
Oh, yeah, and you know what you have, folks, is that. Yeah, Tom, just take your money, man, and then you have a day off too. What I always love. No, I'm not kidding, man. When you can make that kind of bread and it's 10:30 in the morning, get rid of the screen, get rid of all of us, unfortunately, and you know what? Take a groove, man, because that's how you'll end up making more money.
I am taking that advice.
Yep, and go watch the Masters.
Right.
And we'll miss you, okay? But guess what? A clean head is going to make you more money, man.
And we're only going to miss him until Monday, probably.
Yeah. Okay, brother. Wait, you know what's so funny, too, is that Tommy and I were talking, and as soon as I don't know if you heard the story, last night I was, it was 7:30, I'm leaving here, and I saw oil stop moving. I says, man, that's a trip. And the first thing this morning, I get up like at 5:30. First thing you came to my mind, because I saw oil, and I says, I wonder if he still has it.
It's a big trip.
I'm so glad you have it, man. That's awesome.
Yeah, I was up at 5 myself, and I'm kind of in the middle of babysitting my grandson, so I will let you gentlemen go. Thank you so much. I appreciate it.
Okay, man. Go have a blast with your grandson. Have a great one, man.
Take care, Tom.
That is a beautiful trade, folks.
Gotta love it.
Gotta love it. Take the bread and go.
Totally.
You gotta remember why you're trading, folks. You're trading
to live,
to
not
get
living to
bread
trade.
out of the market. Dow right now is up $1.30. Nasdaq's up 35. S&Ps are up 16. Stay right there, folks. Come right back. If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Commodity Solution CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 8 equally weighted commodities, including WTI crude oil, gold, silver, copper, nickel, soybeans, corn, and sugar, in one powerful CD. With annual pricing caps of 70% per component, you could earn up to 70% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, occur, your principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this indexed CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The April 14th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
John Logan has just announced that he is hosting a workshop Wednesday, April 20th for all TAS Profile Scanner Plus subscribers, opportunities in the current market, and strategies to profit. In this hour-long workshop, John Logan will use the TAS Profile Scanner Plus to give you a current breakdown of the sectors in the market and the opportunities that are present, as well as providing subscribers with the best strategies to trade with to profit when using this powerful piece of market scanning software. Right now, you can sign up for the TAS Profile Scanner Plus at the front page of TFNN.com. The TAS Profile Scanner Plus is such an amazing piece of software that we're even offering a no-questions-asked money-back guarantee for all new paying subscribers. Don't delay, as John Logan's subscriber event is coming up soon. Sign up now for the TAS Profile Scanner Plus and be up and running within minutes using this powerful piece of market scanning software. With a 30-day money-back guarantee, you have nothing to lose. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We get the Dow Industrials right now up 135. You get the Nasdaq up 35. S&Ps are up 17. The pretty amazing part is that, you talk about a comeback here. So the Dow yesterday, folks, went from a price point of 17,687, down to 17,541, and we're right back at 17,678.
Yeah. And it was down even lower than that intraday.
Yes.
That was just where it closed. It was 200 points off that high.
And the thing that's going to be wild here is that if you put this on a weekly, if we do the weekly, what you're actually going to have is that more than likely it's going to be a test of last week and a test of where the breakout came from with light of oil. Let me just put the diamonds up for a second. So you go up with 17 million. No, you're down at 17. No, it's a toss-up basically. But it's hanging at these highs, man. This thing wants to basically get up there and test those highs out, which is just absolutely amazing, man. Unbelievable.
Yeah.
Lots of opportunities. And I guess when you look at it, though, oil, even we're telling, Tom, move that out and go have a good time. My take on oil here is that swing point wants to get hit. And the higher swing point is quite away from where we are, folks, okay? So,
Yeah, I mean, it's not like you'd be shorting it, right? I know.
No way.
Just tell him to take his cash, but I would not be right now, for sure.
It's taking the cash because, you've got volatility. And
he's in a triple exposure when oil moves 2 deviations. Like,
right.
Compound that, and that's money worth taking off the table. You can't go wrong.
Where do you make 15% overnight? It doesn't happen.
For sure.
It just doesn't happen. 877-927-6648. Let's go over and we take a look at the and what does happen, folks, is that I've been trading this Nadex product just about every day. When you get this much move this quick, though, what does happen is that I'm Hey, I've been bullish now for almost 2 months or 3 months, Darrell. Imagine that.
Time flies.
Yeah, you're gonna have to go get your whole bear suit dry clean now. It's gonna be full of dust.
No. I just picked it up in South Boston. I was up. We had a reunion.
It was in safekeeping in an airtight chamber.
Yeah.
Oh, like what they do with wedding dresses and stuff.
Right? Yeah. Vacuum sealed.
And we got it back to Tampa.
He keeps it fresh on demand 24/7.
Yeah. But it looks to me
always got to be ready.
Right?
It looks to me that I'm going to have to keep it until that market spikes that high.
Especially if you're bullish oil, right?
Exactly.
Yeah.
Exactly. That's exactly
Yeah,
it.
no.
Right. You can't be bullish oil and not be bullish the market because it just brings it up. In fact, watch this. If we take a look at some of these,
you can kind of, I guess, probably be not bullish, but you can't be bearish the market and be bullish oil right now. That's a tough trade.
If you take a look at the XLE, that's up $1.45, and the XLE, folks, this is going to be one of the benchmarks. I really want to see that XLE get into $70 because that November 3rd high wants to get hit. So it's like, okay, man, what I'd like to see simultaneously is that you get the market at highs, the XLE is up there, and if then the market is at highs and the XLE isn't, then I would expect that it's going to be a spike high, and I still wouldn't sell it until a spike high.
One more XLE push-up drives the market higher, and then
drives everyone out of their mind, right? Literally out of their mind. And
you just want to wait for everybody to be driven out of their mind, and then I'm going to sell.
I do. That's what happens. The market is so weird, man. I mean, that's just what it is.
I just in that moment I thought of the trading places where everyone is out of their minds, right? And they go sell, and then there you go.
That's just how it goes, man. It's so weird. I mean, it's it's like, how does that work?
And then everyone really goes out of their minds when everyone sells and the market goes down.
Right.
There you go.
And then you just sit there waiting patiently, and then you're like, okay, bye.
It literally is the pit from Trading Places.
It is
summed up in one big circle of life of the market.
It is. And then what ends up happening, and this is the sad part, is that you're out at a bar having a drink or something, and everyone's telling you that, no, I'm going to sell now. And it's at the lows, and they look at them, and it's like, no, don't sell. I remember this so well, folks. So picture this. And the Asian downdraft, okay, in 1998, right? It was vicious, okay? This thing was, and the reason it was so vicious is that we had gone up for so long. You went up from 1994 to 1998. Everyone just used to, the market was always going up.
Yeah.
You'd walk into work, and people would be just making thousands of dollars overnight. It used to, I was day trading, but there were guys that were holding overnight, and it used to blow my mind. I says, man, how do they do this, man? Do you know what I mean? And we'd be making good money, but not like people that were holding overnight.
Sure.
Because, these stocks would
Big
open
jumps.
up $10 or $20, $30, right?
Yeah.
So then the Asian contagion comes in, right? And what happened, folks, is that it was 6 weeks of just viciousness that just never stopped, right? So picture it. In that context, we just do price and volume. So I was looking, I says, no, okay. We grabbed it on the way down. I says, no, this is the lows. We're out of the bar that night. We're drinking, a couple of drinks,
Sure.
It's early.
Yeah.
And I meet a bunch of my friends, right, that have been in the market forever, right? And they said, I gotta sell this market right now. And I says, okay, hold it. You've been in the market, you're going to sell this. And I said, that was another indication. I said, please don't sell this market right now, okay?
It's tough sometimes.
It's terrible.
Right. Yeah.
That's how it works. And sure enough, that was the turn. But I remember that so well because that was it wasn't one of the largest downdrafts, but because of the way that it never went down for 4 years, people felt it was.
Sure.
And they were way too leveraged. You know? And that's
how things go, right? They swing too far each way.
And that's kind of what will happen if, in fact, we get the pullback, which I think we're going to get, because we haven't got a vicious pullback since 2009.
In the entire market?
Yeah.
Okay.
Well, we've got two decent ones.
Recently, we've had a couple good ones.
Oh,
but
yeah.
There's been that quick bounce back, which is kind of.
That's right. But they've
It's so quick. It is. It really
quick.
doesn't really have any fear in it because it's so quick.
And people forget about it.
Right. They do. I agree.
When we look at this, so watch this.
I mean, there's some intense days in there, though. Just to, what I mean?
For sure.
Yeah, as you guys know, I'm just saying, it's
for sure.
On a daily basis, almost comical, and then though almost comical at how little fear there was on those days. So that's the whole how that compounds.
And people got rewarded not selling.
Right.
And that's
why when the second one came, there was definitely no fear because we're like, we just did this like 3 weeks ago.
Exactly.
And everyone's cool.
Exactly.
Then eventually, everybody's like, oh wow, it's happening.
Exactly. And then it's like, oh man, like I waited way too long. What was I doing?
And this is, this is the third time,
it gets more dangerous with every time, for sure.
October of 2014, picture, we're April of 2016. That was the first downdraft.
Yeah.
Guess what? If you didn't sell in the month, you went higher.
Yeah.
The next one took a long time. It didn't happen until August. And guess what? You went to 1867. Well, 2 months later, you were back up at 2100.
Yeah.
And then we were down to a lower low. So what you have in this marketplace, which is, you do have 3 lower lows, and at this point 3 lower highs. So that's the definition of a downtrend. Now, I think the market's going to be so deviant, though, that it's going to spike that high.
Of course you do.
I know. It's pretty sick, man.
No, I agree. And if it's one flash sell or something, there can be anomalies, right? There can be days, there can be things that happen like that. But when you start seeing it a few times, for me, I just look at that and I say, oh, there might be something really there.
That's the way to look at it, too.
Right.
And what happens is this, in technical analysis, you look back and say, why didn't I see that?
Yeah, right.
Because the evidence is there. So it's better when you see it, just what you just said, that, okay, hold it.
Just have it on your radar, right?
Yeah, right. You stay right there, folks. We'll come right back. Our phone number is 877-927-6648. If you haven't test drove the Nadex platform, folks, great time to do it. We're out here each and every day trading it. Dow right now is up $1.26. Nasdaq's up 34 rather. S&P's are up 16. We're going to right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. And that oil market just is staying up there really nice. God bless
Excuse
you.
me, a little sneeze. Maybe a little pollen in the air still.
Yeah.
Even though inside, it's sneaking in here. Hey, it's spring in Florida right now. Even though we're getting snow in the Northeast, it is for sure.
Is it going to snow in Boston this weekend?
I don't know, man. I was there. I was only there last weekend when it snowed. Then it snowed Monday, but now I think they got some 70-degree weather during the week. Hopefully they're out of it.
That's perfect. So let's see, XOP. One of the Tigers want to look at XOP. XOP. Okay, so this is the oil and gas exploration ETF. It's trading at 31.42. Oh, this would be interesting if this is taking a swing point out. So we're over the swing point, 7 million, hour and a half, 7.5s to 35.
I just was wondering, I was, what type of oil and gas companies would be in there too, right?
Exactly.
Right.
We'll
the
find
tiny,
out.
more exploration style.
So let's see. This is the SPDR. Yeah, this is interesting. So SM Energy. Oh, there's a lot of them in here. Look at this. These are all smaller ones. So there's no. This is the S&P oil and gas exploration.
Yes,
it must
that's
be,
what
right?
I saw that word. Yeah.
Right. So it's 2%. The largest weighting is only 2.2%. So
and I think I saw the words equal weighted in that.
Oh, cool. Okay.
So that probably is just something they're constantly maybe balancing, and that's why they're slightly skewed.
Equal weighted index. Okay.
Yeah.
The oil and gas exploration and production select industry index. So this little baby here. Let's see what we've done thus far. So. If you want to see how the markets like to go after high volume swings, though, this is one of them. The thing is laying out there. Had a high volume swing of 31.68. You're at 31.41. You've hit, and it could have the volume today. Looks like it might get the volume. If you get that volume, the next step up here would get it up into 35 bucks. $35. It would just be ice, too. It's not like these things have got so killed. The thing that's pretty cool in general about all of this is that oil has got so killed and the equities got so killed that it can be a dead cat bounce. But guess what? A dead cat bounce can give you 100% profit.
Yeah.
Yeah.
Similar to how we've seen some of those gold companies.
Oh, there's no doubt.
Especially in the smaller ones, which that would be.
Yeah. Well, here, we got Steve from Nashville. Dunkin' Donuts,
I think we got one call. All right.
Oh.
We got Rick from Oregon.
Oh, sorry. We got Rick from
All
Oregon.
right.
Hey, Rick. What's going on?
I took that straddle trade on crude oil
Okay.
that Darrell was talking about.
Sure.
I think I got it right.
Okay.
It was the 39.25 to 40.75
Yep.
buy, and then 37.75 to 39.25 sell.
Good for you.
Yeah.
So I don't know. I may 8 points ahead on the one, but that's just taking back the 7 for the other one.
Yeah,
There
you
so that's
maybe
a breakout.
$2 or $3 ahead, maybe.
So, okay, so Darrell, where does he need that thing to go?
Okay.
He has to get it over. Does he have to get it over 4? No, he doesn't have to
It's
get
like
it over
15 cents a movement,
Yeah,
right? That's it.
I was talking about like a Siamese straddle. He's doing a straddle. He's doing 39.25 on the meeting of the ceiling of the floor of the leg. So he actually has an edge to the upside.
Okay.
So if it just moves up, like he's probably already in profit, aren't you?
Well, I'm right dead even
By like
now.
a few bucks?
I had $7 on the low side.
Right. So yeah, you're up probably a few dollars right now. So anything on the upside is good for him. On the downside, it's gonna have to drop down to 39.25 before you and plus your risk before you make it on that.
I should have checked the other spread, the next one down from it.
Yeah, the one
whatever
below
is
that is
close
the one that really made the risk really small to the downside.
I see.
So, but if you, you're
I'm
slanted
learning.
to the upside because basically this is here I can show you on our.
Yeah,
Then
let's
put
go over
$50 down
this.
to
This
do that
this
one.
is the straddle you did right here. So see how there's more risk on the long contract?
Yeah.
There's like almost no risk on the short contract, but of course you have to go through the loss of the long and make that money back, and then you start making money on the short. But if you do a Siamese straddle right here, they cross over each other, and so there's very little risk. It's just it has to break out of both sides by like 15 ticks.
Got to break out, yeah.
Yeah, so like where that one would have to break out would be like 38, 35, or I'm sorry, not 30.35, 39.85, or let's see here, 39.50. Yeah, so I mean, there's like this very small zone that once it breaks past, let's see, the buy point 39.71, so plus 15 ticks. It's pretty much 39.85 almost in either direction. So
I see.
That's interesting looking at, though, because what Rick did, Darrell, would that be something that you could do if you were a little bit more bullish, the situation, though?
Yeah, if you're bullish, but you're like, hey, this thing flies down, I want to go ahead and just buy it.
I like that too. Okay.
Because you may just literally go, you know what, I'm bullish on this, but it's only $5 for the short. If that thing flies down, then hey, this, I mean, it's not really insurance, but it is if you're completely wrong. Which, I mean, we all are all the time.
And
right?
we see the huge volatility in the markets. Right, exactly.
Yeah.
Well, I was thinking you guys said it was a 2-deviation move to the upside, though, right?
Yes.
So I was thinking if it moved, if it really shot, it'd shoot back down, wouldn't it?
It could, for sure.
Oh, yeah. I mean, it's definitely, it's at that one of those points where it can fly from here right into the end of the day, especially with oil. Like, people be closing out positions.
But I only got it till the noon.
Yeah.
Oh, you got it to the noon. Okay, cool.
But a lot of those guys are going to want to walk out before lunch, and not come back.
Well, okay. Well, then maybe it's a good trade, hopefully.
Hopefully.
Well, thanks, you guys.
Oh, it looks like a good trade anyway. I mean, that's the reality, So it's good to know that there was 2 trades inside there. Do you know what I mean?
Understanding how the effect would.
Right, and what the effect is for sure. You know what I mean?
Well, there's something fun to show you here too. If you're looking at like the DOM, so the depth of market, you'll see there's points where there's like 250 contracts sitting on oil. Like right here, like 39.70 was one of those points, and it took forever for it to break it. They busted it by a few ticks. And so what you're going to do is you're going to see it hit like right below those inflection points where there's like 2 to 3 times the volume, and it'll just bump over. It's the trade. It's those kind of volume points make you doubt your trade.
Yeah.
And like whenever I set stops, I set them on the other side of those points because it'll just bump it and bump it and bump it and bump it. And so and there's another one up here like at 75. So like it'll just hit it and come down, hit it and come down, hit it and come down, and then it'll bust through it and it'll get a few more ticks and then start over and over again. And that's what we're going through right now is we're just hitting those levels of high volume.
It just keeps hitting and go back.
Exactly. It's a great point to scalp if you're a scalper. Like those are the areas you always look for, those little areas where you have 2 to 3 times the volume at a price point on a DOM because it'll just fluctuate around it. So like a little mini magnet. So.
Cooking, brother.
Okay. All right, thank you.
Thanks
Have
for
a
the
great
call,
one,
Rick.
Rick. Have a safe one, man.
Okay.
Let's go to Steve in Nashville. Hey, Steve, what's going on? You there, Steve?
I think he dropped. We lost him.
Okay. He wanted to look at Great Panther, GPL.
Speaking of small gold companies that have skyrocketed.
Yeah, exactly. We'll be coming right back. This is a company that went from 41 cents to 96 in a couple months. But you stay right there, folks. We're coming right back. Dow right now up $1.29. Nasdaq up 33. S&P's up 16. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, Swim Lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Darrell Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. And folks, don't forget, no matter where you are in the country, if you're listening to us in their car right now on the West Coast, that you can get us 24 hours a day right on your cell phone, TFNN.com. Just hit Tiger TV. And as you come over to TFNN, you're going to see we launched yesterday the Tax Day Tiger Dollar Sale, where you can get up to a 40% bonus. This is good until, well, the promotion's on until April 18th, which is Tax Day this year.
We get a federal holiday on Friday, so everyone gets the weekend reprieve, and taxes are due Monday, April 18th.
And the way the Tiger Dollars work, folks, is that they're good on all products at TFNN, no expiration date, and they're totally transferable. So if you have a product right now that you get at TFNN, you're thinking of one in the future,
yeah,
great time to do it.
Now, you know, Andy Hecht's 12 Essential Lessons for Trading Commodities. That course is $595.
Yeah.
Right now, you could spend $500. You get 600 Tiger Dollars. You can attend that course basically for $500 instead of the $595.
Right.
You know, if you're subscribed to any newsletter, you can use them. They never expire, and they can be used for any product, good service we offer. So it's a great deal if you're a customer in any capacity, no matter what. That's
and
what
if you scale it up, if you really want a deal,
yeah,
if you buy 1,000 Tiger Dollars, you get a 30% bonus, or 1,300 you can spend. And the ultimate, of course, is if you want to make 40% on your money, you spend $1,500 and you get $2,100. Yeah, 40% bonus. So it's good from that closes out the 18th.
Yeah, it's next weekend. So we got about 9-10 days up till Tax Day, April 18th. Get your taxes ready, people.
Tax Day.
Pay the government. There we go. So let's go over GPL for Steve. We started to do Great Panther.
Yeah, so Great Panther, that little baby, bottom line is that, you know, it broke topside, has volume. You know, to me, it's a complex ABC up. Your A point on this is 64 cents. Your B is 88, so you get, yeah, let's do this a different way, because you got an ABC up, but what this is doing, it got over the 91 cents, so I suspect you're going to try to get into the $1.18. So going all the way back from July of 2014, the low there is $1.18, the high is $1.49. Now, if you really, the kicker with Great Panther, though, is this. This is the big number here, folks. And this is where, if you have the out of time in the trade, you know that markets don't end on volume. And what you're going to see, and this is going to be a mind blower if this comes true too, what you're going to see is this. This has a high volume high at $5. Isn't that sick?
How happy does that make you?
It makes me, listen, that's why I'm owning it.
I'm
It's
sure.
like
No,
the risk versus the reward is like pretty incredible.
For sure.
And what, we've had Bob Archer on a million times, but so when you get a 97-cent stock, this is what's really weird too. You get a 97-cent stock, and they have no debt, and they still take in $72 million a year.
Yeah.
With no debt, that's not bad. Do you know what I mean?
It's not bad.
No,
Yeah.
Silver has to move. I mean, Silver has to move. But
right, of course. Like anything, like any commodity-based equity, right?
How many calls do we get in here, even a day, that companies don't make money?
Right.
Okay, and have debt. This company has no debt, and has cash.
Yeah.
So hey, we'll see where silver goes, man. But there's very few equities that have those high volume highs. But in the gold market, which is so cool, there are a few of them that have a high volume high. And silver hasn't moved, but watch this. Pan American Silver took out its highs yesterday. Oh, look at it, it's nonstop too. It took out its highs, had juice behind the move yesterday. Look at that, man. Pan American Silver has just gone from $5.38, folks, to $11.95. Ride 'em, cowboy. Darrell, thank you so much. Congratulations to your daughter.
Thank you.
Dallas cattle yards are going to be have her name on them.
Perfect.
You stay right there, folks. Basil Chapman's coming up next, and then, of course, swim lessons, Steve Rhodes, Dave White, myself. Nice, pal.
Thanks, man.
Go get him, folks.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.